Ines,
aware. Yeah.
Can you check for us? I believe it started trading at
$87.77. $87.77.
All right, so we are off to the races, and we're going to be watching this. If we can pull up, I think we have.
So it looks like the valuation, if we're seeing a trade now, it's above $87. Of course, the price is moving rather quickly, but we're talking about a valuation of about $29.5 billion for this company. Phil's laughing.
Phil's laughing. Why are you laughing?
It's just exciting. We haven't seen a $10 billion plus company come out probably since Dropbox. I mean, this is blowing things away, and I think the big question you had was right. Are they going to be able to sustain this type of valuation over time?
And the other question is, you were talking about scooters. The headwinds that a company like this, as well as Uber, face going forward. Scooters are big on the West Coast, but when you come to the metropolitan areas on the East Coast, overly regulated. You can't ride a scooter. You can't even use a hoverboard in New York City without getting a license. So that's a regulatory hurdle they face. Yeah. You also have this issue. We all love to talk about autonomous vehicles. You're going to have insurance companies get on board with covering autonomous vehicles. 50 different states have 50 different laws governing this. It's not coming tomorrow or even the next year or two.
That's right. And one of the interesting things that Lyft mentioned during their roadshow and also on their S1 was that one of their biggest focus areas was to lower their insurance costs. And I bet that was to get ahead of the fact that once they start doing autonomous vehicles, it's going to get even more expensive. I would estimate that the autonomous vehicle delivery for them on the road is probably a 5 or 10 year effort. And they're going to really have to hope that they can continue to execute on their vision on that path, because being a 5-year-old business as a public company that's losing money the entire time, I wouldn't want to be in that seat.
I think the market here, one, is valuing Lyft as if they've cracked the code on autonomous driving, and then two, there's no risk with their employees. That's a risk that has, I think, gotten underplayed.
Right, that Ines was just talking about.
They might have to be counted as employees soon, and that would dramatically raise up their costs.
Brian, maybe this is oversimplifying, but are investors bored? Look how excited Phil was just then when we started trading. But I mean, is this sort of indicative of what we're seeing? Yes, you have animal spirits in the market. You have to acknowledge that, right? So when you get a company that has been private for 10 years, finally coming public, people just say squee and they forget about their models.
I haven't heard that one yet.
well, yeah, there's a couple facts. One, we can understand this business. We take Lyft, we understand, and if you a Warren Buffett practitioner, that's one of his hallmarks. But two, there's a lot of cash on the sidelines. The past year, cash has outperformed. Do you want to sit on cash? No. Why not take a risk with a company like Lyft?
I would also say that Lyft, though it's a unicorn, is kind of a unicorn of the unicorns. One of the interesting things about Lyft is it is now one of only 9 companies that's publicly traded with $2 billion a year in revenue or more and 100% revenue growth. It's basically unheard of in the space. And so I know there's going to be a lot of attention on, oh my gosh, have we reached peak? Are we in 2019's bubble? But the fact of the matter is Lyft is in kind of its own territory. If we were to see a $2 or $3 or $5 billion enterprise software company that comes through with $800 million of losses, like we kind of saw with Domo, then you're going to have to, start looking for the exits a little bit more.
Okay, so the folks at Uber are watching today. What are they saying as this is now off and running and they're coming next month?
They're probably saying, keep your books in order, don't talk to the press. In 2 months, we're going to do this ourselves.
Cha-ching.
Yeah. How much is a risk is the contractor issue in your mind?
I think it's a big one, and it's not just going to affect Lyft. It's going to affect Postmates, Uber, and a lot of this gig economy. And so I imagine that each of these companies has plenty of activity and a lot of people knocking on doors in Washington, D.C. trying to keep this on one side of the coin rather than the other. But it could be very impactful. In fact, the idea of giving shares to contractors is actually a difficult one for Lyft. They wanted to put this program in place, and one of the first responses they got, and I think Uber did a few years ago, was you can't just give shares to these contractors. You could give them to employees if you wanted.
So how did they?
They kind of created a plan that allowed you to get a bonus that you could use to buy shares.
Right, they had a cash option, didn't they?
Exactly,
for that? Yeah.
Which is the nice thing I thought about too is this is a big change and step up for Lyft on how they're rewarding drivers. I know they've always been a friendly face and have a nice guy image, but I remember the first promotion they did for drivers was once you did 500 rides, you got a jacket. Now you do 10,000 rides and you get a huge cash bonus.
10,000 is a lot of rides.
I mean, those are professional drivers.
Yeah,
at this point.
Exactly.
Professional contractors.
Yes, yeah, exactly. All right, well, we've got the Lyft price there. You see it. We're still trading higher by about 20% here. So obviously, there's that euphoria is playing out
Stock's down.
as we see it. Yeah, come on, don't say that.
$30 billion. They're valued more than, what were we saying, than Fiat Chrysler. Their market cap is
it's comparable to some of the airlines, I think, as well.
Greater than United and American.
Hey, it opened up at 87.77. I mean, a little profit taking here early on.
And how sustainable do we think that this demand for the stock is going to be?
So one of the things that I think is interesting that was talked about a little bit earlier is that there are a mix of institutional long-term holders here of Lyft, but there are also people that like to play the momentum in these names. I think you saw a lot of this in names like Snapchat and other ones where you have investors that are coming in for locking in short-term gains, trying to capture this euphoria. They may be in today and out tomorrow. So I think we'll continue to see that. And you're going to have a lot of employees as well about 6 months later that are saying, man, my shares are worth $86. That's pretty good.
I'm just curious, in the weeds here, but NASDAQ must be breathing a sigh of relief right now. They get to brag, boy, we pulled this off and look how well we did it.
True.
Got a great listing. I got a little nervous that it took, 2.5 hours.
Because we all remember Facebook, right?
Well, and there were a lot of jokes on Twitter about that this is similar to waiting for your Lyft car. First it's 3 minutes away, then it's 7 minutes away.
Right.
So.
It's a big winner too, GM. They invested, put $500 million into Lyft, and what is their stake now worth, over $1 billion? What do they do with that cash? Do they sell? I don't know.
That's a good question.
When we talk about Uber, because we just had an earlier guest talking about the fact that this is a domestic play. We've been talking about all the things that Uber does, but that the market for domestic rideshare, that alone, these two are going to be the behemoths. This is going to be GM versus Ford of the old days. Yep. I mean, this is what we're about to witness.
Yeah, I think Uber's words from Travis Kalanick when he was CEO said, "We plan to kill any competitor," I think that's changed a little bit under Dara's steed, but I think it's going to continue to be a straight fight between the two. But I think Lyft's focus and their execution and what they can point to, again, growing a company 100% when you've already got $1 billion of revenue is no small feat. And remember, that's not just the amount of money people are spending in cars. That was over $8 billion that people paid in fares. This is a pretty tall task they've accomplished.
The most important, what they do with all those cheesy big pink mustaches that they used to put on the bumpers and the front of the cars, did they just throw them all out?
I'm proud to say we have one at our office. So we have one at our office, which is good. But yeah, they used to do a little fist bump to the rider that would sit shotgun, which I thought was pretty fun. So, they've matured a little bit.
And just to recap all the numbers here, so $72 a share is where we had them priced. The opening price was $87.24, and that gave it a valuation of about $29.9 billion. At the moment, it's hanging on to a gain of about 20%, so trading around 86.5 here as we get on to, 10 minutes or so into the trading of this stock. What are some of the other ride-sharing companies? So we have Uber and Lyft. Where does Juno fit into here somewhere? Where does Via fit in? Is that owned by one of the other companies?
There's been some consolidation. I believe Juno has already been acquired by one of the companies. Uber just acquired Careem, based in the Middle East, to kind of continue their global domination. So there are some limited players, including Via here in New York, that I think people use.
And let me ask the question as a consumer, because I sometimes will look, okay, I can get this ride for maybe $22 on Lyft, but it's 25 on Juno, it's 26 on Uber. When might we see the competition push these prices down?
I think they're continuing to see it. Lyft has actually spent a lot of money on marketing, even as they ramped up towards IPO. It's kind of similar to what you see with software companies, where they may actually grow their sales force and marketing to kind of push up numbers as they lead to be a public company. Lyft took a similar strategy in really pushing out their marketing spend. But I think that the part that still holds true is that Lyft has been able to grow the amount of dollars spent per active rider by almost 100% over the last 2 years. So their average rider is spending twice as much per year on rides, which is kind of showing the overall pie growing, which I think is going to be their recurring story.
And you just gave me an idea. Why hasn't anyone invented an app that comparison shops for you?
And shows you?
Because you would have to know, you'd have to have access. You'd have to have access to each of the rideshare logistic softwares.
Get that.
They'd charge you for it, probably.
I'm sure they would, but I don't know. I would use it.
In this market, maybe it's $1 billion.
Jared, I know you're watching, and Jared.